McDonald's is one of the most popular fast food restaurants in the world. Almost everyone knows them, and they're returning a lot of their free cash flow straight back to shareholders in form from dividends and share buybacks. In today's video, we want to evaluate whether or not buying the stock at today's price could make sense. Let's look at the numbers first. They made almost $26 billion in revenue last year, with a net income of $8.22 billion, which gives them a profit margin of 31%, which is considerably high for a restaurant. And they are currently selling for $318 a share, which gives them a PE of around 30. So they are currently a bit more on the expensive side. So let's look at two different cases to see if buying the stock could make sense. We're going to look at a simple 5-year analysis here for this bear case. And we could assume that they at least grow with inflation, but in a bear case, I would assume that their pricing power drops even further so that they don't even match a growth of inflation roughly. So I'm going with a bit lower of 2% revenue growth here and a dropping profit margin of 28%. But they still carrying on to buying back a lot of shares, especially considering that they would probably drop in price a bit considerably in this case. And valuing the company is a bit difficult. These numbers definitely would show signs of decline. But McDonald's has been historically a very strong and expensive company. So I would figure that they would still be selling for a respectable PE of 19, around that area. And this would take the stock price to around $240, which by today's price would mean an annualized return of negative 5.43%. But in contrast to that, let's look at a bull case, same 5 years. And this time a more, very respectable revenue growth of 5% for such a large and established company. And the profit margin staying around their very good 32% mark. And a bit lower share buyback because the stock would stay rather expensive at this level probably. And a higher PE of 24. This would take the stock to around $362, which by today's price would mean an annualized return of 2.63%. And if we average these two cases out, then the stock would almost stay flat. So McDonald's is definitely an interesting company, and if you can get it at a reasonable price, it can be a great addition to one's portfolio. But looking at these numbers, I'm not convinced that, at least for me, the stock is a good deal right now. So I'm definitely going to keep it at my watch list at a much lower price and maybe wait for some macro trends or something other for some kind of larger hit on the stock in order to maybe potentially buy it one day. But right now I'm not interested in the stock. But that's at least what I'm thinking. Maybe I'm also missing something. So if you know more about the company, let me know down in the comments, and I will see you in the next one. Bye.